Opendoor stock just wrapped up Thursday's session with what I would describe as a textbook consolidation day. The stock closed slightly down at $9.94, a dip of 27 cents or 2.64%. But the real story wasn't weakness. Instead, it was stability. In fact, if you zoom out, what we saw Thursday was the market starting to confirm that the $10 mark isn't just another number. It's shaping up as the new psychological and technical floor for Opendoor, and that's a huge deal. Think about what's happened over the last couple of weeks. We've had a near 80% single-day rally, news of Eric Wu and Keith Rabois returning to the board, the appointment of Kaz Nejatian as CEO, and all of this happening in the context of the Fed signaling not just a quarter-point rate cut, but the possibility of as much as 0.75% worth of cuts through the remainder of 2025. Against that backdrop, Thursday's flat to slightly red session wasn't a setback. It was actually the kind of base building you want to see in a stock that has already had a massive run. So let's frame it this way. Thursday wasn't about losing ground. It was about the market saying, okay, $10 feels about right for now. Let's digest, let's consolidate, and let's prepare for the next leg up. And that's exactly the type of trading action you want if you're bullish for Friday and beyond. Now, one of the reasons I think the consolidation story is so powerful is because of what's happening behind the scenes with shorts. We've been hearing more and more about the size of the short positions against Opendoor. Big institutional names like SquarePoint Operations, Group 1 Trading, Jane Street, Walleye, and Simplex have been identified as being on the short side, not to mention Martin Shkreli, who has become almost the public face of the bear case against the stock. But here's the thing, Thursday's action made it clear that, even with heavy short pressure in play, the stock isn't rolling over. When a stock can hold its ground after an 80% run and still defend $10 in the face of profit-taking and short pressure, that's not weakness, that's resilience. And resilience is what breaks shorts. Every day this stock spends consolidating around $10, the shorts are bleeding a little bit more, both in financial terms and in confidence. At some point, that breaking point comes. And when it does, it sets up the kind of forced buying that accelerates momentum to the upside. Now, let's talk about leadership. Because one of the big reasons this stock is attracting so much attention right now isn't just the price action. It's the energy coming from the top. Kaz has only just started as CEO, but is already making waves. We've heard about him sleeping in the office, which feels very Elon Musk-like, and that's the kind of signal that resonates with retail investors and even with some institutions. It says, this guy isn't here to coast. He's here to grind. Then we had his first interview, where he made it crystal clear just how big the mission is at Opendoor. He spoke about redefining real estate, making transactions frictionless, using AI and data to simplify the process of buying and selling homes, and creating a platform that does for housing what Shopify did for e-commerce. That's not a small ambition. That's a generational company ambition. And investors are starting to buy into that vision. Keith Rabois added to the momentum when he signaled that the next 9.5 weeks could be even bigger than the last 9.5. That's a bold statement, but coming from someone like Rabois, it carries weight. Remember, this is a guy with deep ties to Silicon Valley, to venture capital, to people like Peter Thiel and Elon Musk. When he says something like that, it's not idle talk. It's a hint at what may be coming down the pipeline. Eric Wu's presence also can't be overlooked. Wu was the original visionary behind Opendoor, and his $3 million insider purchase last week was one of the clearest bullish signals we've seen in a long time. When a founder doubles down with his own cash at $6.65 a share, it sends a message. And with the stock now firmly above $9, he's already sitting on a paper gain, which makes that buy look even smarter. That kind of conviction from insiders gives retail investors even more confidence to stay the course. But what about the critics? What about the people who say Thursday's dip shows weakness, or who argue that this is just another meme-style rally? Well, let's look at the evidence. Meme stocks like GameStop and AMC were often untethered from business fundamentals. They were pure retail momentum plays. But Opendoor is different. It's not just about retail energy. It's about a real company, with a real platform, tackling one of the biggest industries in the world, housing. Yes, there's short squeeze potential here, and yes, that's part of the narrative. But unlike GameStop, which was more of what Warren Buffett might call a cigarette butt stock, Opendoor is in the middle of transforming itself back into a growth tech story. They're leveraging AI. They're expanding their geographic reach. They're aligning leadership around a clear, ambitious mission. That's not a meme story. That's a growth story. And the timing couldn't be better. The Fed's comments this week made it clear that rate cuts are not just a one-off. They're part of a broader trend. The housing market is incredibly sensitive to interest rates, and Opendoor sits right at the intersection of that sensitivity. Lower rates mean more buyers, more sellers, more transactions, and more volume flowing through Opendoor's platform. Even if the Fed had surprised with no cut on Wednesday, the broader outlook is still that cuts are coming, and that's bullish for Opendoor. The fact that we got a 0.25 cut with guidance for up to 0.75 more this year only adds fuel to the fire. Now, in terms of Friday's trade, I think the story to watch is whether the $10 floor holds. Aftermarket trading already saw Opendoor claw back to that $10 mark, which strengthens the case that we're building a new base. If Friday opens strong and volume builds, you could see shorts start to squirm. If it opens a little softer, maybe there's some more profit taking, but as long as $10 is defended, the bull case stays fully intact. Looking beyond Friday, the catalysts are lining up. We've got Kaz's leadership style making headlines. We've got insiders buying. We've got institutions like JP Morgan reportedly turning bullish. We've got Eric Jackson's tireless advocacy keeping the retail army fired up. And we've got shorts under pressure, with some of the biggest names in the industry betting against a company that looks like it's finally found its footing. So where does that leave us? It leaves us with a stock that has already 20xd from its bottom, but still has the potential to go much, much higher if the transformation narrative continues to play out. Remember, Eric Jackson has thrown out numbers like $82 a share as his price target, and with the company now valued as a platform play rather than just a housing transaction business, that kind of upside starts to look less like fantasy and more like possibility. Friday's pre-market story is all about framing Thursday correctly. It wasn't weakness. It was consolidation. It was the market saying, we're good with $10 as a starting point. And from here, it's about building momentum, keeping the shorts nervous, and letting the leadership team deliver on their vision. To sum it up, consolidation around $10 is bullish. Insider buying is bullish. Leadership energy is bullish. Fed rate cuts are bullish. And the short squeeze narrative is only adding more fuel. That's the setup going into Friday, and it's the kind of setup that should have Longs feeling very confident about the path ahead.